Hello everyone, George DeSantis here with a look at the market for the week ending Friday, January 31st, 2020. Um, Before we begin to look at the charts, etc., we usually bring up a disclaimer which is required so that you're informed, but I'm not a professional investment advisor. And therefore, if you need such advice, you turn to one who is so qualified. I'm a psychologist. I do this for my own purposes, put it on a YouTube video so that others can see it if they wish. Let's begin then by looking at some charts, the weekly chart of the S&P 500 as we usually do. So here's a weekly chart of the S&P 500. Um, and the first thing I like to look at are the moving averages. The 4 exponential moving average in yellow, the 9 in this red line here, or magenta line, and then the green line, which is the 30 weighted moving average. So we have different periods here. So the 4 is above the 9, 9 above 30. Technically, insofar as moving averages are concerned, although it shows some weakness here, we still have an uptrend. We don't have the 4 crossing below the 9 or the 9 below the 30. Now, let's take a look at some other bullishness, and then we'll take a look at the what can be bearish about it. So the next thing we can notice here, insofar as bullishness is concerned, is that MACD histogram is still above the zero line, which is the bullish territory, and there really is no divergence on the weekly chart, no divergence of MACD from price on the weekly chart. There was one, as we saw, or there is one on the daily chart. We'll take a look at that later. The other bullish sign is that Williams percentile, the 30 period, is still above the minus 50 magenta line, and that usually indicates an uptrend. Likewise, the sum of the rate of change indicator, Jerry Appel's indicator that I wrote this formula in here for, that is still above the 4% line. So these are the bullish indications. Now, if we want to take a look at some of the things that are negative, first thing we notice is that the parabolic switched to being above the most recent bar. Now, I use the parabolic with these new parameters here. So there are others who will use a different parameter, but this is one I find to be very useful. In any case, this is bearish. It's now indicating we have a downtrend. Now, so those are the indications that I find on the weekly chart. Weekly chart still looking pretty bullish, although we can see that histogram pulled back here. Let's take a look at the daily chart. Okay, so on this daily chart of the S&P 500, again, looking at the moving averages first, you can see that the moving average, the 4 exponential moving average, crossed below the 9 right about here. And it's remained there throughout until Friday anyway. The other thing we notice here is that the parabolic, besides the moving averages, the parabolic switched to being above the most recent bars, and that's where it's remained. So the parabolic was indicating a switch in terms of the trend right here, and that's what we got. We got a downtrend. Now, what we notice here too is that we are now approaching the 2 standard deviation line, that blue dotted line. So we actually hit that on Friday, that blue dotted line. We also hit the 50-day moving average, which is this line here, this magenta line. So hopefully we'll find some support here because of hitting this oversold region of the Bollinger Band, as well as the 50-day moving average. But on the negative side of things, continuing on the negative side of things, we do have a bearish engulfing candlestick here. The body of this candle totally engulfs this candle, and that's bearish. So this is indicating perhaps more downside to come. If we look at some of the other indicators, if we look at MACD histogram, first of all, we should note that bearish divergence of MACD, because as the market made a new high, MACD made a lower high, And we talked about that a couple of weeks ago and said we might expect a pullback. Well, that pullback is in effect. It's coming back. It's pulling back. So we do have now in bearish territory MACD histogram. The other thing we notice here on the daily chart is that Williams percentile finally crossed below this magenta line at -50. That's bearish. And also the sum of the rate of change indicator crossed below the 4% line earlier, back here. What date was that? That was on the 24th of January. So this is where the market started breaking down, when the 4 crossed below the 9 on the daily chart at least. So that's where we stand. The weekly chart still looks pretty good. The daily chart is looking pretty bearish still. We are likely to go lower. So as I said, it looks as though this market could go lower, especially because of the virus, etc., and other external events. So the question becomes, what can we expect? What can we reasonably expect in terms of a pullback? How low can we go here, or could we go? So what I did was plotted the Fibonacci retracements from this December low to this January high, okay, January 22nd high. And what we have here is the retracements of the typical ones we look at are the 38.2 and the 50% retracement levels for now anyway. And we can see that 38.2 was 32.36 on the S&P, and we closed at 32.25. The 50% retracement is approximately 32.05, and so we are simply between the 38.2 and the 50% Fibonacci retracement level. That's where we closed. And if we come further down, we might find some support here at the 50% level. If we drop even lower than that, between 50 and 61.8 or 618, the golden rule, this is what is often referred to as a bear trap. In other words, bears are likely to be trapped here if they continue to short the market even more. So this is 3 standard deviations, this yellow Bollinger Band. So I would think, my personal opinion is, we might find support here. We should find some support at 50%. And if we don't, somewhere between 50 and 61.8. That's insofar as Fibonacci is concerned. Now here's a best choice chart. I think it's instructive to look at this best choice chart of the SPY, which is the ETF of the S&P 500. So what we find here is that about a week ago, this SPY was very overbought. Now it's very oversold. So consistent with what we were just discussing insofar as Fibonacci retracements are concerned, we might find support at that 38.2 Fibonacci retracement level, because right now we are at the extreme of 6.4% on this regression channel. Doesn't mean we can't go lower, but the likelihood of finding support here is very strong, as we've done here, So let's turn to a few stockcharts.com charts. And this first one here is the new high, new low index. And you can see how, as the market pulled back, that came down. So the number of new highs versus new lows, this is what this plots here. Now you can see it's becoming quite oversold. The other thing we might look at is, well, here's another chart on stockcharts.com that we usually look at, and that is the percentage of stocks of the S&P 100 above their 200-day moving average. And you can see that it's just about sitting at the 50-day moving average and the 200-day moving average. So maybe we find some support here if that virus epidemic doesn't get too much worse than it is right now, and that's a big if. So let's take a look at some individual stocks now on Shaken Analytics, and this checklist here is a checklist that allows us to see at a glance whether the power gauge rating, what the power gauge rating it looks like, and what we're looking for is stocks that are showing green, to be brief about it. So you can see that Google is now very bullish, etc. So Google is looking good here. You can see it's oversold, and it's also rated very bullish. Now Microsoft also looking pretty good, but except for this neutral rating, all that means is that it's neither oversold, overbought, or oversold, but you can see that it's ticking up here. So Microsoft, I still own that one. I don't own Google. XLK, well, we don't get one of these checklists on XLK because it's an ETF. But you can see it's now oversold with the rest of the market, and it's outperforming the rest of the market here. So I still have that. Apple I still have. I'm going to move through these pretty quickly. Apple I still own, but there's some profit taking going on here. I haven't sold it. I still have some covered calls on it with the help of my friend Terry, making some changes to roll up on Apple, the options, the covered calls. Still own it. Excuse me. Adobe is looking good again, has been since back here. Since back in November, Adobe has become quite positive again, or bullish. And you can see that it changed its character here as well. I got rid of BMY. You could see why it, the money flow turned negative. It's now oversold though. So it may be a time to get BMY again, but I don't own it right now. iPay I still have. Came back with the rest of the market here, but I still own it. It's becoming oversold. MasterCard, I don't own it right now, but it's still a stock that has performed very well, as you can see, and it's becoming oversold. Its character has changed from negative to positive here in terms of relative strength, and everything else looks good. It's bullish here on the power gauge, and it's also showing some good money flow. PayPal I don't own now, but I like the stock. And when it became negative here, I got rid of it somewhere here. So I don't own PayPal right now. I owned this for a while, Southern Utilities, but I got rid of it. And this is what it's done since. How smart is that? Visa I don't own right now, but it's part of iPay, so I own a lot of iPay, and I'm satisfied to own the ETF of all of these. Let's take a look at some other ones. Target I used to own, but I got rid of it too. You could see it broke down, and I got rid of it in time, perhaps. Tesla's, I bought that and have quite a bit of it now. And you can see it's now ticking up from an oversold region. So I think this stock, as I mentioned to you, I think this stock is a 10 bagger anyway. And so I'm holding it for the long term. Let's see. InMed is an interesting one. I bought it, I sold it, I bought it again. It hit overbought regions here and pulled back. But I still have quite a few shares, not the 4,000 I had before, but I do have about 2,000 shares here. Let's take a look at some other shares, some other stocks. So I did some screening again yesterday on Shaken. I'm looking for stocks that are green here. Give a lot of green, okay? And here's a list of them. You can stop the video and take a look at the list if you wish. But this is a list of most of them, or many of them. And so you can see that this one, I don't own many of these stocks here at all. But these are stocks that are showing very good, indications here on the checklist. They're checking, see, they're oversold, like this one, oversold and ticking up. Nice money flow, very bullish, and their relative strength is pretty good. So I'm going to take a look at some of these. You can stop the video and make a list if you wish. Deckers, I think this is called Deckers. Deckers I don't like because you got these reddish indications here. But there are a few other ones that you might want to take a look at. So be my guest. Listen, have a good day. Enjoy the Super Bowl. I think San Francisco does it with the under. So enjoy the football. I will do the same. We hope to do this again next weekend. And good luck with trading next week. Let's hope that the week doesn't turn out to be too bad. All right. See you then.